Hi, everybody. Good morning, good afternoon. How's everyone doing today? If you can please type into the chat that you can hear me, that would be great. And of course, I was just informed that the link above was not the right link, so my apologies. Let me give you the correct link. There you go. Let me see if I can get rid of the other one. Yes, I can. All right. So, first thing out the gate, if you haven't joined our trade hacking club, which hasn't really officially started, we're just kind of ramping up for it, and I guess you can say that this session is the start of our trade hacking club, although I'm kind of looking at this as more of a dress rehearsal. But I still want this to be a valuable session for you guys, and I have something very specific in mind, which I will explain in a moment. I see a lot of people just joining, so I'm just kind of chatting with you guys and bantering a little bit just to let people get in and get settled in and stuff. So thank you for joining me. And again, up in the chat, you will see the link for our new channel that we're creating, our Discord channel. It's going to be the beginning, opening the curtains to our trade hacking club. And a lot of you might be wondering, well, what the heck does trade hacking mean? That's a good question. And I got the idea from the whole funnel hacking concept, and a lot of the hacking, the word hacking is used all the time these days, life hacks, and, well, you all know what hacking means, right? So for me, I thought it would be a clever messaging name for this idea of figuring out what works, what doesn't work, dissecting effective trade setups, like deconstructing and then reconstructing, putting it back together again and going through that process to learn how and why setups work the way they work, what setups work under what situations, which ones are, I hate to use the word best because there's, certain things are best in certain circumstances. And then there's also personal style. So you have to know yourself a little bit too. But that's all part of trade hacking. Trade hacking is really doing the necessary steps to put together the thing that's going to work best for you. That's probably the best definition that I can come up with. Hopefully you guys understand what I'm referring to, and if you have any questions or comments or anything else you want to add, just go ahead and type that in, and you guys can interact with each other too. Part of the whole idea of the Discord group and the Trade Hacking Club is that the sum of all parts is greater than each particular part. In other words, all our brains together is more powerful than all our brains just separate. Does that make sense? One good idea from someone can really make a big difference for everyone else, type of thing. So I'm hoping to inspire you guys and spark your imagination and get you thinking about your own trading to help you step up and get to that next level, whatever that level is for you. All right, does that make sense? So I see a lot of very familiar names, and I want to again thank you all. Please hit the like button if you like this session, and don't forget to click on the link and join our Discord group. All right, so let's talk about what we're going to do today. So I've had it in my mind to teach you guys the art of fast testing. Some of you know what it is. Some of you have done it quite a bit. Some of you have never done it. And I would recommend that you all learn it, because this is a really great way to use your time effectively and efficiently and get a lot of valuable information. So it's a leverage type of concept. You're going to leverage your time as minimally as you can to get the maximum bit of information that's going to help you. All right. And what I mean by that is, well, think about when you're interested in knowing if a chart, a strategy, a time frame is worth your own time and effort to trade. Is it worth trading? Is it something you should consider? Is it something you should investigate? Those are real important questions. They're high-level questions. And I came up with the 3-step sniff test, which I've put on the training of the strategies that I've created, and I've also made a YouTube video here on this channel. If you haven't seen it yet, you should watch it. But basically, there are 3 specific questions that you want to ask and then answer. And if you get the answer to these 3 questions, you're going to be in a great position to know if a chart is worth drilling down further and really squeezing out a trade plan, or leaving it, tossing it in the trash. And that's a pretty good piece of information. Knowing what not to trade is just as important as knowing what to trade. Would you all agree to that? So it begins with, well, first of all, why is it called the 3-step sniff test? And the whole idea came to me once. I forget what it was. Was I watching Perry Mason? I don't even remember. Some courtroom drama. I don't know. But the idea is, if it smells like a duck, if it talks like a duck, if it walks like a duck, then it's probably not an antelope, right? It's not an aardvark. It's a duck. That's so that's the whole idea. If the chart looks like it trades well, if it smells like it, if it walks like it, then there's a good chance it will trade well, and vice versa if it doesn't. So it starts with a very simple concept. And if you think about the concept of trade hacking, this is a good place to start. And again, if anybody has any questions, comments, if you agree or disagree, just let me know. Let me just quickly say hello to Keith and Bruno and John, Armando, Andrew, John again, another John, Brett, Lionel, Mariella, Robert, Ranjit, Jim, Brad, Judith. Thank you all for joining. I really appreciate it. All right, so the 3-step sniff test. So I've kind of done this already, at least the first 2 steps, the first 2 sniff tests with the Euro Yen. This is a 6-pip momentum bar. And we're going to fast test this, and I'm going to show you how I do it. And hopefully you guys are going to learn a technique that you can then take to your own charts and figure some stuff out that's going to work great for you. Okay, to me, this is like one of the first steps to trade hacking. Obviously, you peel away the onion layers, and there's a lot more to it. So the first sniff test is you decide a session. Like, when do you want to start trading? When do you want to stop trading? And then the first test would be, by looking at that window of time, are there enough trades during that session on an average basis? Now, the question is, well, what does that mean? What are enough trades? Is 1 trade a day enough? Is 20 trades too much? I mean, the answer could be yes or no to both those questions. 1 trade a day might not be enough, but it very well could be also. What if it wins a lot? What if it's the second trade plan? What if you have an active trade plan, you're looking for 1 more trade plan, and 1 good trade a day is perfect, right? So it's a little bit subjective. You have to think about your own situation, ask the question of what you are trying to achieve, and from that you get an answer if there's enough trades in a session for you, for that particular question. Does that make sense? You kind of have to think about your situation, whittle it down, and remember, you're not going to get the answers that you're looking for if you don't know how to ask the question. So think about what the question is as it relates to you and what you're trying to do with your trading. Okay, that's very important. That's the first sniff test. You don't just look at one session. I would recommend looking at maybe a dozen sessions. It only takes a few minutes. Look at a dozen sessions, start time, stop time. Are there enough trades? Maybe if it's one trade a day and there's 2 or 3 sessions with no trades, maybe there's a few sessions with 2 trades, but the majority is 1 trade, well, that could still be good. All right, so there's question number 1. It's not hard to answer. The sniff test number 2. Is the trade an appropriate size? And you're looking at the average trade. Is it an appropriate size? So if you have tools like, for example, we're looking at the Spotlight Master Suite right here. And these are great tools because it's really easy to look at a trade. You can click on a trade and quickly see the stats on it. You can see the risk. You can see the reward. It's right there in front of you. You can see if it's an adequate or an appropriate size. What if it's too small? What if it's a small trade and you have a lot of them? Well, that's probably not good. You probably have too many trades and it's going to be too noisy, right? The trade costs of getting in and out of trades are going to steal your lunch and take away your profits. Well, that's not going to work. So you're looking at the average of, again, maybe, 20 trades, say. Or look at those 20 sessions or 12 sessions that you looked at to determine if you had enough trades, and look at the size of those trades. Are they appropriate? If there's too much risk, like if it's a futures contract and the risk from entry to stop is larger than what you can afford to trade, then that's not appropriate either. So like this, through process of elimination, we can learn what not to trade. You see? It's either too noisy or it's too risky. One good thing about Forex is that if the trade is too large, you can just scale down your position size. You can't do that with a lot of futures contracts because you can't go smaller than one contract, right? Now with the E-minis, maybe you can, because now the micro contracts are actually excellent to trade. They weren't in the past, but now they are. That's not true with other contracts. So you have to look at what you're trading, put it into context. Okay, so those first 2 tests are quite easy to figure out. Are there enough trades in your session? Are the trades an appropriate size? That leads me to the third question, the most important question, and is the question basically the subject of this presentation, this first Trade Hacking Club session. And it's the big question: can you quit your session with a positive result a vast majority of the time while controlling your drawdown with minimal and efficient trading? I know it's a big question. It's a mouthful. Let me say it again. I'll say it faster so you can just don't overthink it. Can you quit your sessions a vast majority of the time with a positive result while controlling your drawdown with minimal and efficient trading? That's the key. As backpack traders, we want to trade less, make more. We want to work smarter, not harder, right? So this is how you do it. You prove you can quit your session positive most of the time, but also control your drawdown. And like this, you can grow your account and grow your position as you grow your account. That's what we're after. And that's what the 3-step sniff test puts us on the path to doing. Now, let's say we find a chart that can do that. Maybe we find more than one. I think it's wise, if you're really trying to figure out your best trading approach, to look at a dozen different charts. At least a handful of them, whatever that means. A dozen, maybe it's too much. It just depends. I think a dozen's good. It depends on how much time you want to spend towards finding the cream that rises to the top. Because if you do 10, 11, 12 different fast tests, maybe it's the same symbol on 3 different charts. Maybe it's 4 different symbols on 3 different charts. The 2 or 3 best ones will present themselves to you. Don't you want to know what that is? I do. Once you figure that out, you're not done. The real work comes with the UTA spreadsheet and building a log of trades and learning how to live with the win-loss column and the random distribution of wins and losses while getting statistics to prove that you can make money with this plan. Quitting positive is the first step, and like this, we can eliminate a lot of hours of time working with the UTA on charts and trade plans that are just going to prove to us we don't want to trade them anyway. Let's not spend hours and hours of our precious time with the UTA spreadsheet if we can't first prove it with the fast test. You see the sense in where I'm going with this? But that UTA spreadsheet, and we're going to get to that in subsequent sessions, is so important because if we can't prove that a trade plan is going to make us money, the chances of us making money go way down. We're not going to succeed. We have to prove it so that we can believe in it, so that when we go through a rough patch, we're able to proceed and keep going, because the winners come if we've done our homework properly and we've proven it properly, okay? So let's start with that premise and let's get into this. So for me, I've been curious about the euro yen now for a long time, and the reason why is because it used to be a staple in our trade room. We had it playing out in our trade room for years, and it's been a great trading pair, and then it kind of dried up and slowed way down, and now it's kind of come back to life again in many respects. I think it has. I want to prove that now. I want to investigate it. I think that this is going to be a worthwhile secondary trade plan for day traders. If you have your main plan, I think this is a good secondary plan. So for me, it's an interesting premise. So we're looking at, let me kind of lay the framework here, and then we're going to start doing some fast testing so you can see how I do it. All right? This is where light bulb moments start happening for you as a trader. This kind of work is when you get your epiphanies and get excited and maybe end up losing sleep. It's happened to me because you're so excited from what you discover. And I'm hearing this from a lot of people that I work with one-on-one, that when they do this work, they get all these aha moments, all these aha moments. That's what this is all about. All right, so here's the setup. 8:30 New York time is the start time. That's when our typical U.S. session for Forex day trading begins. I try to keep it at that place. That doesn't mean you have to. Maybe you want to start earlier. Maybe you want to start later. Okay, but 8:30 is like, I just try to keep it as the benchmark start time. All right, so we're gonna do that. We're using the Spotlight Master Suite. This is the diamond level because I've got 2 additional setups that I'm including in this trade plan. And the reason why is because we need the extra trades, I think. I think that there's not enough trades, or it's marginally enough trades with the strategy, with the straight gold level Spotlight Power Trader. The pink, the blue, the green, the yellow. So I'm adding the dark blue and I'm adding a magenta. And what those setups are is the yellow trade. And if you don't know what that is, it's where you have your exhaustion dots, the proximity to our 50 moving average will present the yellow trade. Okay? There are 2 other setups similar to that. One of them is the dark blue trade, and it takes the same premise but applies it to a 20 simple moving average. And the reason why that's a good trade is because we pick up a lot of subsequent action moves. And if you learn anything about what I teach over the years, you have your action, reaction, subsequent action move. And if you can trade that subsequent action move, it tends to be really good. So in a trending market, it works well. All right, and the 20 SMA marks the end of a reaction move really nicely. Just to illustrate this really quickly so you understand the concept, let's just call this from here to here an action move, right? It comes down, 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 down. Yes, we pick it up on the pink trade, but it's before the start time. Doesn't matter. The reaction, look how it goes right into the 20 SMA, that dark blue line. Marks the end of the reaction move, and notice how it sets up a subsequent action move, which will often mirror the first action move to some extent. You see how it mirrors it pretty close? Gives you a nice leg down. Not perfect. It's just an abstract idea. But notice the blue trade, the dark blue trade, off that 20 SMA gives us the trade into that subsequent action move. You see? So that's a setup we're going to include in this particular thing we're going to test today. The other one is very similar, but it's off of the 200 moving average. So instead of the 50 moving average giving us the yellow trade or the dark blue trade off of the 20 simple moving average, the 200 exponential moving average will give us some trades too, and if they pop up, I'll point them out to you. Okay, because I've noticed those win a lot in a lot of my testing. So I'm including those, all right? So I could easily turn those on and off with my Spotlight Master Suite Diamond Calculator, all right? So that's the trade plan. Start at 8:30. Finish at noon, and when I say finish at noon, that means don't take any trades after 12 noon. And we're going to try to get to a 10 pip target. A 12 pip target, but a 10 pip. Let me put it this way. A 10 pip target is the minimum profit level that we will accept as a winning trade. Anything smaller than that doesn't count. And I will talk you through these details more and more as we go. All right, so just a quick look at today, and then we're going to go back to the beginning of the year and start fast testing with this in mind. If you have any questions, type them in. I'll answer them as we go. So 8:30 start time. Oh, yeah, we can get in sync with the trade too, so just so you know. So here is 8:30, right? So this is 8:31 actually. That would be, when you fast test, also it's a good habit to not look ahead as best you can. Line up your chart at the right edge of your chart and act like a trader. So we already know what happens on this one, but as we fast test, we're gonna try not to cheat too much, but we won't be able to help it because I'm gonna try to move quickly. Here's the other thing. I'm all about economizing my time and getting the most out of my efforts. So since I'm looking at this chart, I'm going to fast test the US session, which starts at 8:30, the European session, which starts at 2 a.m. to 5 a.m., the window of time, and the Asian session, which starts at 6 p.m. New York time for us. 3 sessions. I'm looking at the charts anyway. It won't take that much longer to quickly look and see if the session wins, loses, or breaks even. I've set up an Evernote. You guys, I can't live without Evernote. Maybe you guys have your own note-taking software. For me, it's Evernote. I know there's a lot of good ones, but I do all my fast testing on Evernote. So here I've got my Euro-Yen 6-pip momentum bar. I've got some basic rules that I'm going to follow, right? I've got something I want to look at just to see if it makes a difference. Sub-zero is when the trend strength indicator gets below -20 and stays down there for a while. Maybe that's a filter. I'm going to keep my eye on it. We'll talk it through at times. That's something you could go back and fast test on its own. You can fast test anything. There's a notion I want you guys to understand. All right, so some rules here we're going to stick with. I'll refer to them sometimes. This is a US session. I should probably write that down. All right, I'll write it down later. This is the Asian session. This is the Euro session. So we got winners, winning sessions, losing sessions, break-even sessions, and sessions where there were no trade. I'm going to count those too. All right, so this will make sense in a moment. So like if we were to fast test any old day and it happened to be today, this would be the first trade and it comes down. You can see we know it's going to trigger in right here. It's going to hit the target right there, and that was good for 13 pips. That's a winning session. We can keep looking and see what happens. Did really well. But ultimately, that's going to go in the win column. All right, I'm not going to put it in. I'll get there when I get there. It probably won't be during this session. I'm not going to be able to go through like the beginning of the year all the way to April 20th. That's going to take too long. I'm probably going to do that on my own as I continue fast testing this chart. All right, so the whole idea is for you to look over my shoulder and see how I would fast test this chart, because this is something I'm interested in, that I want to know about, that I want to determine if it's worth my time and effort to pursue further. Everyone with me so far? I'm also showing add-on trades. You might say, hey, how come you see this trade here? It's being tracked all the way down and you got these subsequent setups here. I want to mark additional places where maybe I want to get in and take a trade. For example, maybe this trade happened too early and it moved down and there was no way to get in sync with it. And while that trade's going, there's another setup that happens at 8:30 and I'm able to take it instead of not seeing it at all and missing the opportunity altogether. So I'm showing add-on trades. If they become relevant, I will discuss it when we get to that point. Question about if I'm using the Sub-Zero setup. I'm not using the Sub-Zero setup, but I might look at the Sub-Zero concept as a filter because of something I've noticed with the Euro-Yen. And if it, I'll point it out to you, but Sub-Zero merely states when the green line, which is a trend strength indicator, gets below -20 and hangs out down there, might flatten out, that's usually when volatility is super, super low. That's not necessarily a time to be afraid to get into a trade, although we may want to look for a clue. The thing is that can get you in front of an explosive move. So all I'm doing is being inquisitive. I don't know yet if that's going to play a role in what I'm looking at or not. But part of fast testing is paying attention and noticing things that could, push the odds in your favor a little bit by filtering out lower odds trades or by showing you trades that tend to win a lot. And maybe you want to, refine your trade plan rules and focus on something that you specialize in. You learn how to specialize, okay? These are concepts we get into later as we progress deeper and deeper into our trade hacking club content, okay? Right now we're at high level stuff. So I've already prepared a chart going back to the beginning of the year just to save some time. So let's jump right to it, all right? So on January 3rd, remember it's New York time, it's already, I should go back to here, it's already Asian session time on the 4th, which is the first day of the year after the new year. You see, this is all New Year's right here. You can see this is this is just bars getting filled in that are meaningless. So the Asian session starting at 6 p.m., which is 1800. First trade kicks in. You can see it. It gets in at 126.56, and it quickly stops and reverses. Well, I don't know if it's quickly. An hour later, does stop and reverse. So we want to keep track of that, right? We want to know that we got in at, not at 56, but at 44. Now, here's the other thing. We're going to do key level adjustments, and we're going to do them manually. So this one got in at 46, right? We're going to adjust around 5s and 0s. So if an entry is at a 4, we'll push it up to a 6, 44 to 46, all right? We know there's going to be like a pip of spread. We're going to, we could put that in our head or what. We're also only going to be considering 1 or 2 positions only, because we know if we can make it work with 1 position, then we could learn if more positions will work when we get to our UTA spreadsheet. All right, because for a fast test, if you do multiple positions, and you can, it just slows you down. You need a calculator, and you have to constantly be adding and subtracting to see if you're positive or negative. So for this particular case, let's assume, I think 2 positions is good, and we're going to go to our first target level, and then, I don't know, we could decide if we go to the next target or if we trail. Right now it's a little abstract till we look at several sessions. Sometimes you have to do more than 1 fast test. All right, so the other thing I like to do is I have hotkeys where I mark my charts. That way, when I save it and reopen it, these markings will stay on the chart. Okay, so we go, this is going to lose, right? Because it's going to go from 46, not to 34. We're going to do a 2-pip stop and reverse adjustment. These are all concepts I teach. I'm just going to stick with the normal stuff that we usually do. So from 34 to 32, from 46 to 32, right? That's a 14-pip loss. And it's really 24 pips when you consider 28 pips when you consider 2 positions. So we get down and we're able to make 12 pips on this one. And then if we're going to target 2, we made 20, basically I would say I would give this a break even, because I don't want to spend too much time. If I'm doing this on my own, I got my calculator, I'm adding it up, I'm figuring it out, and I'm putting in the proper, did it win, did it lose, did it break even? I think after spread, we're just going to say it broke even. 2 trades. Do we take another trade? Maybe. I mean, we have to decide how many trades we want to take. The Asian session can be a long session, so a lot of it depends on what you want to do. So I've got this down from 6 p.m., quitting at 11 p.m. So it's a long session, maybe too long, but let's start with that. So this one triggers long here. This would be the 3rd trade. I shouldn't have put break even yet because we don't know what's going to happen. And this one, you got to stop and reverse right here at 14. Okay, so this is tricky because right now you've got a key level adjustment down to 14, and then you have your 14 is the entry, not 16. Remember that. Then you have the 2-pip adjustment from 14 down to 12, right? And then you've got this low here at 11.9. So it never gets to 12. So you're still long, is the point. Your stop and reverse adjustment saves you from getting short here. By the way, that trade there is the trade off of the 200 moving average that I was talking about earlier. So that we're still in the 3rd trade, but look at how this takes us all the way through the European session. The long trade, is it realistic? Those are questions you're going to have to ask, but look at how it wins. Ultimately, the Asian session wins, but you're going to be up for a long time doing it. So I'm just going to leave it at, I don't know. I don't know if I should put it at break even or win. I think that you have to make a decision right now while you're fast testing. If you can manage this trade properly, if you have a way to turn on some automation, if you set your targets, maybe you get to break even. With FX Synergy, you can tell it to get to break even, and then it's going to not break even. It's going to stay at break even, and then you could have it exit at your targets, and that could all happen while you're sleeping, for example. So with that in mind, it lost 1 trade and won 2 trades. Anyone disagree with that? So now let's look back and see what the European session did. So the European session starts at 2 a.m. And at 2 a.m. it got short here. It flipped over to long here. And that long trade hit all its targets, trailed all the way up. And again, you have to decide if you're going to trail or get out at targets 1 and 2 or what. When you start looking at this chart early on, and maybe you discover this when you're doing your first 2 sniff tests, and you see an abundance of explosive moves with the trailer outperforming targets, you might decide your second position should be a trailer. So your first position goes to target 1 of 10 pips or more. Maybe you say, nope, I just want it to go to target 2 and that's it. Remember, you're in charge. Well, we're going to say the first position is 10 pips or more, and the second position, trail. Let's go with the trail because to me it's just more exciting. And we're on the first trade of our fast test. So that's where you might come up here and make your decision. 2 positions. Whoops. 2 positions. First viable T and trailer. So the first viable T is 10 pips or more and trail. Yeah? Why not? So the European session is going to win too. And I put that in the wrong place. That's a US session. So we got a winning Asian session, winning Euro session. So this is what I would do early on. I'd be thinking about it. I don't know all the answers. I'm going to be observant. I might have to do more than one fast test when I, notice things and want to get new answers to new questions. So now that takes us to the US session. And the US session starts at 8:30. So we got this trade here. Notice this is a get in sync trade. And it only makes 9 pips. We got to go at least 12 pips. All right, here's the thing. There's also a subtle rule. Target 1 has to be 10 pips to take profit. We don't move our stop until we've hit target 1, but it's also going 12 pips unless it's just 10 or 11 pips. Then we don't want to have the rest of our trade at risk if we hit a profit. So this is 9 pips. We don't take profit here. Did it go far enough to move our stop to break even? It would have had to go 12 pips. Target 1 and 12 pips. And the little dot sitting right up here, you could barely see it. Money management is at 80. It didn't quite get to 80. So it's going to stop and reverse, basically, is the point. Right there. It stops and reverses. Stops and reverses, not at 64, but at 62. Remember, you got to make the key level adjustment and then 2 pips. We want to try to stay long. All right, so we're in at 62, and this one's going to come down and down. And I think we could visually see it ends up winning. Also, we could note that if we did not take the add-on trade, the first trackable trade would have been this one. We want to note that because if the add-on trade isn't effective for us, we'll learn it. We can keep track of that. That could be a separate fast test. You could keep another sidebar, add-on trades, win-losses as you go. Yet another question you could answer with a fast test. I'm not going to do that now, but we will take a mental note that the add-on trade didn't really help us in this particular session, even though it was still a winning session. You guys with me so far? There's a lot to go into this, right? Because we don't know the answers. We're trying to discover the answers. This is what trade hacking is. Eventually, we're going to be like, okay, let's get the answers to this concrete set of questions. We're almost at concrete set of questions. There's a few unanswered questions we're not quite sure of. So now we go to the next session, the Asian session. Starts at 1800. Well, here we go at 1644. Where's 1800? 1800 is right here. Market's really slowed down. We can get in sync. Getting in sync means if there's an earlier trade, and then our start time, 2 bars later, if it has not hit money management, if it is not stopped out, we can get in sync and take the trade. And there it is. And you could see that it's a small trade, but target 3 is 10 pips. Target 4 is 13 pips, but target 3 is our minimum acceptable target. And it hits it. So in one trade, the Asian session wins again. Now we go to the European session. Eventually this gets really fast. Of course, I'm talking you through stuff, so it's a little slower right now. So Asian session goes from 2 to 5 a.m. First trade doesn't come until 4:30. That's going to lose. You can see it. The next trade is after the start time. We don't have to do anything else other than go to the European session and count it as a loser. It's a fast test. Now we go to the US session. 8:30 start time. So here is the pink trade off the 200 moving average, the one I was telling you, the magenta trade. You can change the color because it kind of resembles the other reversal trade. We're looking for an 8:30 start time. 8:30 is right here. Now, could we hit the entry? The entry is, by the way, it's the most current trade, which is this one, and that happens to be an add-on trade. This is the trade being tracked. The add-on trade is the one we're taking. We get in sync with it, and we're above the entry at 8:30, right at the entry. So in these bars, we're able to get into the trade, and it comes down, and it's a full winner. And look at how close, target 4. Target 4 was at 05. It got to 05 in 3 ticks. It missed it by 0.3 of 1 pip. We can call that a winner, right? Did it stop out at break even? Well, break even would have been here. Let's see. Break even would have been after target 2. Target 2 is 10 pips, which is here. So anyway, the U.S. session is one and done. All right, so far we have 2 winning sessions for the U.S., 2 winning sessions for the Asian session, 1 winner, 1 loser for the Euro session. Any questions? I know I'm going fast now because now we're going to start rolling. So we're going to quickly get to the Asian session now. You can see how it comes pretty quick because there's not a lot of bars. You really have like 1 trade per session, maybe 2. The Asian session being the longest, so 1800 is down in here. There's no trade. This is your first trade. So the first trade is a winner. Look at that. It hits target 1 for 14 pips perfectly. Your Asian session, winner. Be careful to put it in the right place. Let's keep going. European sessions next. 2 a.m. start time. First trade is here at 3:20 at 126.68. It's going to lose because it's going to end up stopping and reversing. This is a very small trade. Once we add, let's see, we go from 78 to 80 off the key levels, 81. And so we can only go to target 4 on that one. And it gets to target 4. So how much did we lose? From 68 to 81 is 13 pips. It made 13 pips to target 1. There's a little bit of spread cost. What about the second position? The second position ends up stopping out, didn't quite get there. It's going to be a slightly losing session because there are no more trades. There aren't any other trades in this session, right? So this one slightly loses, goes in the loss column. That takes us to the U.S. session. Okay, so here we are at 8:30. We have this small little trade. We have to get to target 2, which is 11 pips. It can't get there. It ends up stopping and reversing, and we have to do our little adjustment in our head. Minus 2 ticks to 127 even, down to 126.99. All right, so it's going to get in at 127.11 and out at 99. It loses 12 pips. Of course, there's spread, but we already know, we could add that as well. This is going to end up getting into a third trade. How many trades are you going to allow? 2 losses? 3 losses? Do we know the answer to that? Question, did you use the TA or another method to initially determine the calc settings prior to starting the sniff test? All right, Jim, that's an excellent question. Many times I will, but in this case I didn't. In this case, I'm just using our standard Forex trade plan that's on the member site. Okay, so I did not use the TA for that. But that's an excellent question. And the Trade Assist, in case you don't know what that is, that's the automation. Works on TradeStation and NinjaTrader. Actually, that's all Spotlight. Well, Spotlight works on Thinkorswim too, I guess. But there are other times when I will use the Trade Assist. It just depends on the questions that I'm asking. I just happen to think that the Forex trade plan as is really good. But, maybe we prove it isn't. So this is the third trade and then a fourth trade. So if you look at this carefully, we're still before 12 noon. This is where you have to make a decision. A lot of people are like, well, okay, 2 losses, that's enough for me, I'm done. But is that really the right answer? Because usually the best trades follow the worst. So after 2 losers in a row, look, we got 2 strong winners in a row. And you could probably just see by looking at this that it ends up being a winning session because you only have a partial loss. Did this one count? I forgot. Yeah, this one counted. It was 5 trades. 4 trades. Yeah, because this one, the stop and reverse adjustment, well, we're already in the short. So 4 trades, partial loss, full winner, only with 1 position, and then a full winner with 2 positions. You'd have to do the math on this, but I could tell just from experience that this is going to be marginally positive. So for the sake of just moving forward quickly, we're going to count that as a winner. But notice how the 4 trades wins. Do you want a winning session, or do you want to quit with 2 trades and a losing session? It's a question you have to keep track of. When you do your UTA spreadsheet work, you'll be better equipped to decide power of quitting rules and what the maximum amount of trades should be. Okay, question: are the SMS OSOB calc settings on the NetPicks trading site? Yeah, the OSOB this is all standard. It's all it's in the calculator itself. So if you open up the calculator, you could also look at the OSOB itself, but they're all in here. But I didn't touch it. Now that's something that maybe you can optimize right in here. 14 and 7. So that leads to a really interesting notion that I'm going to bring up right now because this is a real trade hacking point. You can decrease the sensitivity and increase the quality of trades. You'll decrease the amount of trades from turning the sensitivity from a 7 to an 8. And what that does is it pushes up the 0 line further, and it causes the market to have to be more overbought or more oversold before issuing those reversal pink and blue trades. And that is certainly an area worth exploring. All right? Side note. This is where the Trade Assist actually really helps you because you can test really quickly and see the results. To do it manually, take a long time. All right, so now we're going to the Asian session. Looks like that's our first trade. This is an add-on trade, right? Because it's already tracking the blue trade. The stop is here. Where's the stop? The stop is at not 126.96. Remember, we adjust around 5s. The stop's at 126.94. You could use a line and mark 94 just so you could see it on the chart. That's where the stop is. A lot of times I'll just draw something like so, mark the stop. So it looks like it's going to stop out here because that's the unadjusted stop. It didn't quite hit it. That's at 96. Our stop's at 94. Remember, we're doing the key level adjustments manually. I'm not relying on the calculator to do it for me. And the reason why I don't do that with Forex is because you got ticks, you got fractional pips in the quote, and it's just, for me, easier to do it manually. I just prefer it. So this trade is still going, in other words. You have to look past the colors and realize it's still going. Remember, the calculator's tracking this trade. It doesn't track the add-on trade. We have to know the rules. So we still don't know if it's going to win or lose, but now look, it does come up and win. So it hits our 11 pip target. It's a winner, and that goes into the win column. You see? Thinking it through. Now we're at 2 a.m. Looking for that first European trade. There it is at 307. Gets short. And it looks like that's going to be a break-even trade, right? Because it ends up hitting the money management level and then stopping out. We're going to call that a break-even trade. Do we have any more sessions, any more trades? No, we're already past our window of time. So the European session gets a break-even. Now we go to the U.S. session. Okay, the U.S. session, we have this trade at 7 in the morning, and then at 8:30, we're right in here. So we get in sync, right? And it doesn't stop out. It comes up, it triggers into the trade, and then it goes through and wins. Hits its targets. Target 2 being the first take profit zone. U.S. session wins again. This time, notice that yesterday took 4 trades. Today took 1 trade. Take what the market wants to give you, right? It's about the dynamics of everything we do. In our goal setting strategy, we call it power of quitting, right? Something I learned from NetPicks years ago when I was doing the trade room. It was so important. I learned that at such a young age. It was super important. It's just stuck with everything we do going forward. The whole idea is that it allows you to take what the market wants to give you. Not what you want from the markets, what the market wants to give you, while allowing you to quit with a positive result a vast majority of the time and control your drawdown with minimal and efficient trading. It accomplishes that goal for us. So it's dynamic. One day might be 10 pips, another day might be 110 pips. Over time, it averages out. We grow our account. We increase our position size while continuing to take what the market wants to give us. Not everyone agrees with that concept, but it's something that's worked over the years for many people, myself included, and I'm a big believer in it because I don't want to be glued to my computer screen. I want to trade less and get out and do things that I love to do more. All right, back to the Asian session. So the calculator, a little tricky here, wants to get short. It gets in sync right here because this bar gets into this entry before this bar, before it closes and prints this trade. So getting in sync, you have to understand that the trade doesn't come until after the bar closes. So when you're at the right edge of the chart and you see that it's 1830, oops. First of all, let's make this bigger. Maybe I should have done this earlier. Would have been easier for everybody. Sorry about that. All right, we know that it gets in sync on the very bar that this prints a trade, but it's already triggered into the short. So now we're short here at 127, actually at 34 because of the adjusted entry. The short happens like right there. Okay? Somewhere in that area. Now, if you really want to get nitty-gritty, you can look at a 30-second chart and make sure it got short before our start time or whatever, but we're just going to wing it and say it got short. Now, the long means that then you would adjust it up to 44 and key level adjust it up to 46, but at the very minimum, you're going to adjust it around this spike right here. So that yellow trade isn't going to get in even if you're not short because you're going to adjust it. We can make 1 or 2 tiny adjustments around near-term support and resistance areas that the price bars show us. A spike like this, a clear rejection of price, we don't want to get long right below it. We want price action confirmation to push through and get us long here. And that's if we're not short. If we're short, we're going to adjust that up to 46 because of our stop and reverse adjustment rules, because we want to protect the short. We don't want to get long unless we get a lot of confirmation we need to get long. So either way, you're the short or flat, depending on if you get triggered in. We're going to say that we got short with this bar getting in sync. And so it's going to end up coming down and winning. You see? Any questions? Got to think these through. So there's our first group of 5. Chicken hatch counting, 1, 2, 3, 4 cross, 1, 2, 3, 4 cross. I use a diagonal line here to represent the cross because it's really fast and easy. And when I go back and count it, super fast and easy. So now we're going to the European session. Starts at 2 a.m. That's 2:35 right there. Anything sooner? No. Okay, that's a quick winner. We could see it. We don't have to look any further. Finally, a winner in the European session. A good winner, too. All right, so now we're at the U.S. session. First trade at 8:30. Here's one off the 200 moving average. That's what that magenta trade is. And that's going to lose. So the first trade loses 13 pips. And really it's 26 pips. And if you add a pip of spread, it's really more like 28 pips. So let's keep track of that. In fact, you could always type in -28. There's no reason why you can't mark up your charts and keep track of what you're doing. So let's see if we can recover from that. Go until 12 noon, no trades. Here's a trade. And it's on time, so that's going to count. So second trade, and that's going to lose too. So we finally suffer our first losing trade session on the U.S. session. You see how this works? Now, you don't have to be testing the Asian session. You don't have to be testing the European session. If you know you're never, ever going to trade the European session, don't bother testing it. If you think you might want to trade when you get home from work, put on the laptop, put it on your kitchen counter while you're cooking, or throw it on the coffee table while you're watching TV. These trades, you could set up templates using FX Synergy, set the trade. You could use horizontal lines. Like I use TradeStation a lot, so I have the alerts tell me when there's a setup. It texts my phone. I have a horizontal line at certain important price levels, and I could, like, let's say I want to know if this pink trade gets to money management. Well, first of all, FX Synergy is going to already know to move my stop to break even if it gets to money management. But let's just say I could put a horizontal line there. I could format it. I can enable alerts and format it to send a text message. And now I know. I could put it a little bit in front of that level. So it tells me before it gets to the point where I have to take some sort of action. So I could use my tools like that, you see? But maybe you don't want to trade in the evening. Then don't test it. You don't need to test things that you're not interested in. It all begins with your own personal evaluation on what's going to work for you. 8:30 a.m. for me is 5:30 in the morning. I'm testing this at 8:30 a.m., but that's probably earlier than I want to get up. I'm always up at that level. Like this morning, I wanted to get up at 5:30. I really did. Well, guess what? I woke up, but that always happens to me. It's just, so do I want to trade at 5:30 5 days a week? Probably not. But I know a lot of you guys do because it's 8:30 for you. So these are important questions that you have to ask and answer to decide how to spend your time. All right, so we're at the Asian session, looking for a trade. Here's the first trade. Notice that it comes 1 minute, it comes 11 seconds before midnight. And we said we're going to go to 2,300. So guess what? That doesn't count. That's a no trade session. There were no trades that session. Too bad, it would have won. Now we're at 2 a.m. 2 a.m. is here, and money management's up here, guys. The first target actually is 10 pips. That's really the cutoff point for getting in sync. And it comes back down after 2 a.m. and hits the entry. And then it goes up and hits the target. The European session's a winner. Not by much. It's a small trade. It still wins. There's another trade here that would have won as well. All right, so now we got 8:30. 8:30 is here. 8:30 is right here. It's below the entry. Actually, 8:30 is in between these bars. So maybe you get caught up and get triggered into this. Let's just say we do at 71. But then we're going to get a stop and reverse at 64 because we have a 2 pip and then a key level adjustment. So we're going to lose 7 pips. It gets short. And it actually comes down and hits a target that's too small. Actually, it doesn't take this trade. It takes this trade. It doesn't matter. Yeah, both trades end up losing. It's going to end up getting long here. And now I see why the bars are better smaller. So this is a losing session, I think. Yeah. Boy, this session goes and goes and goes. We're just going to call it a losing session. And that brings us to the Asian session. Asian session gets short, gets long. I mean, I can just tell by looking at it, it's a losing session. Eventually, you just get good at seeing. You don't have to do the math. You can just see that didn't work. How about the European session? I don't think that European session is going to work either. 2 a.m. Gets into this long trade. Does it get short here? 64 turns into 62 after adjusting. Doesn't get to 62. It misses by 2 ticks. So we're going to count that as still a long trade. Now, yeah, in reality, maybe your broker triggers you in. It just depends. But all we can do is go with the data that we have. We're using TradeStation data for our trade decisions. And so we're going to have to assume it didn't get to 62. And then it comes up and it hits a target 1, which is 11 pips. I mean, the European session wins because the stop and reversal adjustment keeps us out of the short. And that brings us to the U.S. session. So the U.S. session, remember this entry is going to be at 71. It ends up getting short here. Gets short at 62. It's going to flip over to long at 73, right? You go to 71 off the key level plus 2 pips. And this looks like this is probably a losing session. It is, because we're way past where we could take any more trades. So it's going to be 2 losers. So the U.S. session definitely loses. And that brings us to the Asian session. And that's our first trade, and that's a winner. So I have the automation on just because it helps identify trades quickly when I'm fast testing. And it's not a big trade. I mean, it had to get to target 12. I mean, a 12 pip target 4. And it might have even been 11 pips because of adjusting around the spike here. It actually might already be adjusted around the spike. It is. We don't have to adjust because it's below the spike. Still 12 pips. That's pretty small. Still a winner. All right. At this point, I'm going to pause. We've been doing this for an hour. You can see where this is going, right? Ultimately, you're going to end up with a bunch of winners, some losers, some break-evens, some no trades, and then you're going to have to figure out the stats. And so looking at this is another fast test I did in the past. And let's just say, I didn't do very many of them. 46 is not enough. You probably want about 100 sessions. Your statistics start getting stable, where they start to level out. Doesn't mean they're going to still stay where they are, but they change slower. When you get anywhere from like between that 75 to 125 sample set. So around 100 sessions would be good. You see? So then you add up all your sessions. Let's see, I did it right here. Let's just take a look at this. So this is 62 winners, 18 losers, 5 break-evens. I didn't count no trade sessions in this case. A total of 85 sessions. So what I like to do is divide. You can either you divide your winners into your totals, and it gives you your winning rate. I like to divide my losers into the totals. Ultimately, you want your winners and break-evens to win in the high 70% range, closer to 80% of the time, and even above 80%. And if you do enough of these fast tests, you will find the charts that you can quit positive and break even 80+% of the time. You want your losing sessions to be 20% of the time or less, so 1 in 5. So 4 out of 5, you're winning or breaking even. Winning more, obviously. Break-evens should be not that many. More winners. And your losing sessions should be 1 out of 5 or less, 20% or less. And if it is, then you move that over to the list of fast tests that might be worth your consideration to do UTA work on and really flesh it out. If it can't get to that level, maybe you fast test some more sessions, give it a chance. Maybe you've seen enough and you move on to something else. And you keep doing this until you get those charts that give you the answers that you're looking for. This is what trade hacking is. This is how you discover how you're going to make money as a trader. It starts with fast testing, the 3-step sniff test. What you can accomplish by doing this is a lot. Think of the other questions that I asked while I went through, a couple weeks of trades maybe, all the way up through January 13th, 10 days, 9 days, whatever. Not that many. This fast test has to continue all the way to the current date to really get something meaningful. But think of what we were asking. What targets do we come out at? How's our stop and reverse? Are we going to count spread? Are we going to get a calculator out and do the math? Are we going to drill down into a bar to see if it really triggered in or not? And I think you should. Open up a 30-second chart. Did it trigger in or not? Does it count? Does it not count? Because garbage in, garbage out. You want to get the most accurate information you can. That's also trade hacking. What good is trade hacking something that's not true? What other questions did we ask that were important? Do we want to use add-on trades at the start of the session? Or do we want to wait to the first trackable trade? Well, you could turn the add-on trades off and not use them at all. There's so many things you could do. You could track both. You can have a separate set of books and have a win-loss column for both and get the answers right then and there, right while you're fast testing. What else could you fast test? You could fast test if it makes sense to adjust around the 20 moving average. If it's like you have a reversal trade, do you adjust 2 pips beyond? 3 pips, 4 pips? Do you want to get above that 20 moving average to prevent you from getting into a reaction trade? There's so many things you could ask, and then you can go through and look at a bunch of trades and test it and see if it helps or hurts. Fast testing doesn't have to be only about winning and losing sessions. It could be about discovering the answers to one specific question. Go back and look at that situation through a bunch of trades, a bunch of charts, a bunch of times, a bunch of days, whatever, and keep a win-loss column. If you don't have the automation, that's how you do it. Al Tong with a question. I missed the answer to, is there much difference between the SMS and the SPT? Yeah, great question. There is a big difference. So the SPT is the SMS Gold now. So far, okay, it's been rebranded. Instead of Spotlight Power Trader, it's now Spotlight Master Suite. And the reason why is because I include Sub-Zero with the Spotlight Gold level. Sub-Zero is another way to use the Spotlight concepts. We didn't really talk about the Sub-Zero, by the way. Remind me, I'll kind of finish up with that because it's actually happening through this session here, and I'll walk you through it. What you may, another question you could fast test. The SMS. So first of all, let me just open the calculator and show you. That's the best way to do it. The SMS gives you 6 additional setups, and it integrates a strategy that I have never released to the public, and it works really well. It came from Spotlight. I refer to it as fun with moving averages because I never came up with a name. It's basically using unique moving averages setups combined with the Spotlight Power Trader concepts of the exhaustion dots, the balance line, and a few other things. And so it came from the yellow trade. Basically, the yellow trade was the inspiration for this. So the Master Suite, the diamond level is what you're talking about. It gives you these 6 additional trade setups that all do different things. We're using 2 of them with this fast test. We're using what would be the yellow trade, but we're using it off of 2 additional lines, right? Fun with moving averages. We're doing it off of the 20 SMA and the 200 EMA also. But there are these other setups as well that do some pretty cool things. This one's very unique, this 10th setup, D10, where you use a fast EMA crossing over a slow EMA in conjunction with your Spotlight other aspects, exhaustion and balance line. When we do further sessions, we'll explore some of these other setups and what they do. Like we'll do a trade hacking club session. We'll come in and we'll look at this. We'll say, well, what does this do? Let's find out. What does that do? Let's find out. It also gives you some really interesting filters. So there's new filters. Like if you open up the SPT calc, you're going to see this has a lot more. The SMS has a lot more in it. It just does more. It's 2 strategies integrated into one, basically. So that's a high-level answer to your question, Al. Any other questions that I missed? So let's just look at this for a second. Notice that look how long that green line stays in Sub-Zero. So Sub-Zero is when the trend strength indicator drops below -20. Sub-Zero. And then it even goes lower and lower. It's like really low. Maybe we should put a -10 or whatever on here and mark another level. But wow, look how low it gets. It gets all the way down to -27. That's right, -10 would be up here. So -27. And it just stays down there. And then you could look at the price action. Notice how the price action is just range bound. It doesn't go up, it doesn't go down, it doesn't go up, it doesn't go down. Every trade's pretty much a loser. It's just horrible price action. Look how long that lasts. Finally, it comes down, and that's right when the trend strength indicator starts to react. It's a lagging indicator, so you can't put too much stock in it. Like the trend strength has already happened, and then it starts to react. But if it keeps going, that tells you something. The point is that maybe you want to use this Sub-Zero as an excuse to stay away from trades, and you don't start getting into trades until you see it like at least ticking upwards or some other thing. I don't know. It's an idea. Is it a good idea? I don't know. Something maybe worth considering. I do know though that when you get into a trade at some point, when it's in Sub-Zero, you can that's when you can catch some really big explosive moves too. So you have to weigh that out. You're welcome, Al. So if that were a rule, I don't know. Keep an eye on it. You can go back and fast test it if you want. So at this point, I'm not going to just keep doing this for the next hour or two and keep you guys here. I know we've lost some members already. We're down to 36. We were up a lot more than that. Some people probably just got the point, decided it was time to go, or had other things to do, or going to see it later. Whatever. What do you guys think? Did you guys learn something from this? Because what's important to me is that you understand the value of what this exercise will do for you. If you think about the biggest point of what it takes to succeed trading consistently, which most people fail at, it all starts with knowing why you're trading. Number one, to make money. Realizing the only way to make money is to have a trade plan that you can prove has the best chances of making money if you just follow the rules, because you can't just shoot from the hip unless you're just some savant genius. Most of us aren't. Okay, those are outlier traders that I'm not including in this statement when I say that if you don't believe in what you're doing and you don't have a format and a set of rules that you've proven to yourself, chances of success are zero. I mean, you won't succeed. That's why signal and alert services have an inherent problem, because you're relying on other people and their trade decisions. Trade decisions maybe you have not tested on your own that you don't know. You know, you hit a drawdown, you hit a few losses in a row. You don't know how that fits into the big picture over 100 sessions or more. All you know is that you had a few losses and it's going to be hard to take the next trade. See my point? But if you have the big overview and the big point of view that, okay, I've seen this before. I've seen it lose 4 trades in a row, and it's only happened 2 other times in the last 8 months, for example. Then you know that the 5th trade, that's probably going to win. Or after 3 losses in a row, the 4th trade's probably going to win. You only had 4 losses in a row 2 times in 8 months. After 3 losses in a row, that 4th trade's probably got really good odds of succeeding. How are you going to know that if you don't take the time to build your foundation properly? If you don't believe in what you're doing, you're not going to be able to do it. If you don't prove it to yourself, how are you going to believe in it? You see how it all fits together? You can't prove it to yourself if you don't do this work. What are you going to do? TJ says it's good. I believe him. That's enough for me. He's proven it to me. And then 4 losses come and you're like, feel like you got kicked in the stomach. How are you going to take that next trade? You really don't believe. Don't follow me. Don't do what I say. Except for, I'm talking about take this trade, take that trade. Do what I say when I say build your foundation, though. Do that. That's not what I meant. I think you guys know what I meant. Build your foundation for yourself, because trading's too darn important to get wrong. You want to get it right. You have to believe in what you're doing. You have to do your own pre-production work. Bottom line. Because if you don't, you will not believe it. And if you don't believe it, you're going to quit and keep chasing the next great thing. And that's going to be your trading career. It's going to keep happening over and over and over. Right? Anyone disagree? I'm all for anybody disagreeing or agreeing. I mean, but I want you to think about what I'm saying here. This is what I've learned over all these years. And with that, I think that's a good point to leave this on. This is what trade hacking's all about. We're going to get into a lot of stuff, a lot of nitty-gritty. Toby Z, be careful what I'm saying. I'm trying to be, but I think you guys know what I'm saying. I think I'm communicating clearly here. If not, well, we'll get into it again. I'll let you know when the next session will be. I'm going to do it soon. I'm going to keep these going. This was a lot of fun. I even learned something every time. Like the euro yen, it's got kind of piquing my interest. January is always a tough month anyway. We're only 2 weeks in from the new year. I mean, I wasn't expecting to see very much. Had some winning sessions. That's good. Thank you, Toby. Jim W., great session. Everyone should be required to watch this video before trading any strategy. Jim W., yes, I totally agree. Tremendous 11, this has been a great help. Thank you. Have you all clicked on the link and joined our Discord channel? Are you in our trade hacking club? Get in. I don't know how long I'm going to be offering it to the public for free. You guys are in. Click on the link. Get in. I'm excited about it. Hope you are too. Thank you for spending this time with me, guys, today. I hope you all have a wonderful rest of your day. I will be in the trade room tomorrow, right here on this YouTube live channel. Be doing the crude oil report. Make sure you hit the like button for me. Make sure you subscribe if you haven't done so already. Have a wonderful day. See you next time.